and welcome to another wealthmanagement.com Fast Chat. My name is Diana Britton. I'm the managing editor of wealthmanagement.com. And today we're discussing transitioning your book of business with James Schneider, Senior Vice President of Investments of the CTH Wealth Management Group at Wells Fargo Advisors in McLean, Virginia, and also Tom Harsani, Managing Director of Investments of the CTH Wealth Management Group, also with Wells Fargo in McLean. Thank you guys so much for being on.
Thanks, Diana. Appreciate it.
So start off, guys, by telling me, when did you join Wells Fargo and why did you and your team decide to move your practice there?
It's a great question. So we joined Wells Fargo in May of 2020, which was a crazy time. As we all know, COVID was, full blown at the time. Markets were finally just starting to stabilize after a crazy March, April. But it had been something that the team, James, myself, and the partners had been researching for a few years. And really the key reason we were researching it is we really felt a void when we were servicing our clients and we were looking at the full balance sheet of our clients. We felt like the firm, our prior firm, just couldn't offer really what our clients needed in terms of full asset, the liability management. It was something that was extremely important, and we were losing out business to the bigger banks. Our clients were just not satisfied with the product offerings that our prior firm was offering. So we really spent a good year and a half, 2 years researching all of the banks out there, knowing that the future was going to be with a large bank that could offer our clients, everything on the asset management side as well as on the liability side.
And to elaborate a little bit further there, what Tom had mentioned, that we were, for about a good year and a half, we were doing our due diligence of, other financial institutions to potentially work with. And it was one of those things like, even though we got more into the weeds of doing our analysis and dwindling down the list of potential companies that we could, work with or that could service the needs of our clients in the book of business that we have, it really narrowed down to two, in our opinion, there at the end of the day. And what really stood out to us, I think it was it was either a peer, one of our colleagues, or a gentleman recruiting us, really highlighted a study that was done by McKinsey. The McKinsey Group, and really highlighted how this industry of wealth management is going to really change here over the next decade. There's this massive wealth transfer that's going to be going on, tens of hundreds and billions of dollars going from one generation to the next, and into the generation that we feel like is going to be inheriting most of the money. What do they want? They want a simplified approach. They want everything under one umbrella. They want one login. They want to deal with one person. They want simplicity. And that's really the core of our values is, simplifying the complexities of one's financial journey. So we really wanted to take our vision and our values and really apply that to the firm that we decided to work with, which is obviously, Wells Fargo. So we needed that toolkit, and we didn't have that toolkit. We felt like we couldn't compete with that toolkit with the firm that we were at prior. So we were very fortunate in getting that, our clients need us now more so than ever. And we expanded our toolkit. And it, in hindsight, it's really, worked out well, after we made that transition there.
Yeah, and if I can just, our high net worth clients, our ultra high net worth clients, family offices really needed a full toolkit. And after interviewing all the firms, the major firms, we realized Wells Fargo was the firm that offered the full toolkit, not only in terms of products, but also in terms of professionals that could help us educate the clients, stay with us as partners. The one key thing that we find is a major value add at this firm is the people here. The people that we've partnered with across on the estate and trust side, on the lending side, on the commercial banking, commercial real estate side. These are individuals that come in, help us close the business, help service the business, and are there as true partners. And that was something I know every firm talks about, but actually this is a firm where it's actually executed.
That's great, guys. And so, I know Wells Fargo has, different business models or channels from which advisors such as yourselves can serve your clients. Can you describe these different channels that they offer?
Sure. Yeah. So, I think here at Wells Fargo, I think there's roughly 4 channels. There's the private client group channel. I believe that's I don't believe, I know that's the channel that Tom, myself, and all our partners and our team are on here on the private client group. There's the bank division, there's the private bank, and then there's also the Wells Fargo Finance division. And that was a key differentiator as well as we went through our whole due diligence process there, because in a time period where we all hear about RIAs or this team going to this RIA or whatever it may be. I don't think people realize the flexibility that Wells Fargo offers underneath, one brand, 4 different channels, so that Finet is very much like an RIA, a hybrid, type model there. So we have flexibility. So as the needs of our clients evolve, as the industry evolves, we look at it as this is our home for decades to come, where we can, if one channel meets more of the needs of our team and our clients going forward, we can pivot within without causing any disruption to our clients. And we think that that's very important, especially with how much this industry is changing.
So as my partner James mentioned, this is truly a firm that you can evolve with over time. And as your business changes, you can pick between the different models. And that's something for our team. We run a large team, one of the larger teams out of the Mid-Atlantic area. It gives us a lot of flexibility as we think about our future and what we should do and what we can do. So we never have to go through the quote transition period to another firm. We literally can stay within this firm and pick the right platform for our business and our clients. So that was a key, something that really stood out to us in this whole process.
Yeah, and what else stood out a little bit further, just along those same lines of being able to evolve, within these various channels, is the number one thing that stood out to us there in the end was how much Wells Fargo values the FA and his and her relationships. And we felt like that got lost in some of our analysis with some competitor firms, is that they truly value the relationships that Tom has, I have, the team has as a whole. We feel like we're being valued and heard more so than ever before in our careers.
That's great. Why did you guys choose the private client group channel?
Really, we came from a full service global international investment or global investment bank. And we felt like it was the most seamless transition to go from a very light platform to a similar platform. And so we thought it would be the best way to get our clients involved in the Wells Fargo brand and business model here, but also allowing us, as we just discussed, to explore different platforms and channels in the future. So we're very comfortable in the full service investment advisor model. That's where we've built our business. That's where we're very comfortable. But we love the flexibility if that model changes to move to one of the other models that are available here at this firm in a very seamless fashion. And so we're comfortable being full service advisors within a investment umbrella like PCG platform here, the Wells Fargo Advisors, but also loving the flexibility to move on to a different platform if it suits our business needs.
So I'm assuming the more independent an advisor goes, the less support they get.
I don't think that's the case with Finet. I think they're very much their hybrid model of really competing with what's going on in the RIA space right there. From our understanding is on the Finet side, we'd still have, the capabilities that we have now, as Tom mentioned earlier, the access to, the balance sheet of the firm, still the abilities to lend, to go to, our mortgage consultants, our private bankers, and, various channels.
That's great. So I know you guys did a lot of due diligence in making this decision. And, as other advisors are, watching this and sort of picking and choosing, which business model is best for them, how does an advisor go about deciding which business channel is best for them and their clients?
Yeah, well, I think it comes down to, talking to the regional managers, the branch managers. And what I like about it here is they have knowledge about all of the different channels. So at Wells Fargo, it seems like you can ask, very specific questions. They're not going to steer you or sell you into a different channel. They're very much going to help educate you and let you decide which channel you want to go to, at least in our experience. So we were very open along the way. They were highlighting to us the different models that they have available and what they offer here to us. And I felt like I feel like I can go in at any time to my branch manager or our regional manager and get a full rundown of what the pros and cons for our book of business is in the different channels, which I think is just a huge value add here.
Well, that's great. Well, I think we're out of time, but if you want to learn more, you can go to wfa.com/due-diligence. James and Tom, thank you so much for joining me. It's great to talk to advisors, boots on the ground. So thank you.
Pleasure.
Thanks.
Thanks for your time.
Have a great day. Thanks.
You too.